tell you earlier that oil prices were steady as investors weighed strong holiday travel in China that could boost fuel demand against the prospect of rising interest rates elsewhere and slowing economic growth. Brent crude went up this morning, while U.S. West Texas Intermediate crude also gained 6 cents. Well, to talk more about some of the drivers of global oil prices and other commodities in that space is Adesola Sumoni. Joins us now from Reading in the UK, senior analyst, financial derivatives company. Hi, Dr. Adesola, good morning.
Good morning, Ine. Thank you for having me on the show this morning.
Yeah, so once again, of course, we see China is a giant in the global oil space. Its demand, its supply, no, more of its demand affects the market. And we see travels in China driving oil prices again, steady, and then I think it's going to be up after this morning.
Yes, indeed. Thank you for that question, Ine. So like you mentioned, China is indeed the largest importer of crude oil globally, and as a result of that, actions like economic activity in China does have big effects on global commodities prices, particularly the price of oil. So as you mentioned, now the upcoming May Day holiday is increasing the demand for international travel in China. A lot of people are moving to spend the holidays abroad, and that's analysts are expecting that would boost oil demand, which will support prices. However, it is important to note that transportation as a share of China's oil consumption is only 54%. You can compare that to around 72% in the United States and around 68% in Europe. So while there's big demand for travel, the effect may not be as big as expected, and the effect on oil prices may not be so significant. Yeah. Now, other factors affecting oil prices are also, like you said, there's renewed concerns about economic growth, particularly because commodities like oil and copper are sensitive to growth. Earlier in this month, the IMF revised downward growth forecasts for the global economy down to, I think, 2.8% from 3.4%. Last year. In addition to that, we are seeing, for example, three top central banks, the U.S. Federal Reserve, the Bank of England, and the European Central Bank are slated to have their monetary policy committee meeting next week, and all of them are expected to increase benchmark interest rates by at least 25 basis points. All of these factors, renews concerns about a slowdown in global economy, which is expected to also slow down oil demand as well as and weigh on oil prices.
So we
now,
also.
On the supply side, okay.
No, go ahead, Adesola.
So on the supply side, we are seeing OPEC-led production cuts. Around 1.6 million barrels of production cuts is expected to hit the market in May, which is also supporting prices. However, in respect to that, we are seeing some factors coming out of Russia. Essentially, there are talks that Russia is not being transparent about its own production cuts. While the government has said that they are cutting production and exports out of Russia, we are seeing strong exports going out of Russia, particularly going to countries who do not have this price cap in place and are selling at a discount. For example, we are seeing strong exports from Russia going to China and India. So going forward, we expect that in May, when this OPEC plus production cuts hits the market, we expect that the market will be a little bit undersupplied and prices would be a little bit elevated.
Yeah, just like, because talking about Russia, we did hear first 500,000 barrels a day, and then we went to 200,000. So we don't really know which one they are sticking to. And May is just a couple of days away. When we add that to what the other countries, Saudi Arabia and all of that, are cutting, then the squeeze is really on supply for global oil. I hope that will bring good news to Nigeria, though.
Hopefully, and this was happening. A lot of investors right now are just, especially oil traders, are just maintaining tentative positions. I forgot to add that, we're also seeing refining profits, or the profit margin for oil refiners also squeeze, which, points to challenges with demand. But with Russia, like you said, there's no transparency. We don't exactly know what is going on. And with, arrests of journalists in Russia, of international journalists in Russia, it's a bit of a tricky situation. So with that, we don't know whether the government is going to cut, how much they're going to cut, whether they're going to stick with their commitment and all of that. But I think by next month, when the official numbers are out from OPEC, we'll see whether the cut is having the desired effect. But overall, I think that the cut by Saudi Arabia alone is sufficient to shift oil prices upward.
And we hope that will increase our revenue here in Nigeria. All right. So let's look at other commodities now. Let's look at what's going on with the price of gari, rice, palm oil, the staples that Nigerians turn to.
Okay, good question, Ini. If you look at most commodity prices have been flat month on month. Like you mentioned, the price of gari has been flat. 50 kg bag of gari has been flat at 20,000 naira. Price of flour has been flat at 29,000 naira. Cement has been flat as well. But if you look at commodities like tomatoes and pepper, you see the prices are trending upwards. For example, the price of tomato is up 31% to 25,000 naira, and that is mainly because of this scourge of Tuta absoluta, which is a pest that destroys tomato crop in Kano, and because of that, we are seeing a squeeze in supply coming out of Kano. But more importantly, I think one important factor to discuss is the price of diesel. Right, so we noticed that the price of diesel has actually declined to around 640, to an average of 640 naira per liter from around 800 it was earlier this year. And I think that has important implications, particularly for domestic commodities prices. First, it has implications on transport and logistic costs. Right? We think that this is going to drive down the price of, it's going to reduce the cost of transporting these commodities from the north and the middle belt down to the south, which is positive. Also, it is going to reduce the cost of bread production. The cost of bread, at least, the cost of bread. Now, whether that reduction in cost will be transferred to the final consumer is something else. And also, we've seen the exchange rate appreciate to around 738 naira to the dollar at the parallel market. So all of these factors put together, I think it points to the fact that we may see inflation moderate going forward. Maybe not inflation for April, maybe in May, but we'll begin to see inflation moderate. And this also has implications for the Monetary Policy Committee. If inflation moderates consistently, then we might begin to see a change in the direction of monetary policy.
All right, do we know what's driving down the price of diesel?
I think that also tracks, developments in the global oil market, right? We've seen last week, this month in particular, oil prices have been quite volatile. When, like I mentioned, when Saudi Arabia announced the surprise cuts in oil production, we saw oil prices really spike. But over the weeks, we saw oil prices almost give up some of the gains they made following the announcement. So I think it is tracking the developments in
the global space. Right? All right. Yeah. All right. Thank you so much, Dr. Adesola Sumoni, Senior Analyst, Financial Derivatives Company, for your time this morning.